Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording here on Friday, the 19th at about 2 p.m. Eastern Time, a couple hours before the close. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing good, doing good.
I know we had a fun week.
And a fun night last
Last
night.
night was fun. Yeah, last night was definitely fun.
Yeah.
The whole week was good. I hope it was good for you all listening. Today we're going to go over our the normal show, which Barry's going to cover the big five, as we call it: E-mini, bonds, gold, crude, copper, the dollar, and the euro. And I'm going to jump on a couple commodities to review coffee and silver. So I don't want to have any delays because there is a lot to talk about given what's happened this past week and overnight. So
Mhm.
let's jump into it, Barry. There's the mini. We got the break we were looking for.
Yeah. More like let's dump into it.
Right.
We left last week talking about the 5200 block, 5200 and 5104 block. So you guys can catch up on any of the past episodes. We sort of attacked this like a story and we build on it each week. What happened was we were looking, well, we've been bearish. We called this high top that came in, and we were looking to see how far, you can ride the trend. And 5104 was like a minor support level, at least for the daily. And we slipped through that this week and managed to almost get to our next target, which was 49.46. I would say it got close enough.
Yeah.
And we bounced off a little bit, but it doesn't mean, I mean, now we're, this is sort of like midstream. We're not at the beginning. We might not be quite at the end. So where are we? What's happening here? So one of the things we talked about last week was, where is the support? Where is the next level that we're looking for? And I remember looking at the Dow chart, and we talked about how, even this 90 is really a key level, and how that would be the key level, one of the levels for the Dow at least to key off of. And coming down about a half a square, 45 degrees is a decent move.
Hmm.
If you go up here and look, you can see we came down
There it
exactly
is. Yep.
45 degrees. And that's usually a good place for a pause and maybe some kind of to begin a counter trend. Now, remember, we were keying off of, I mean, the high, we were looking at a few different cycles. Some of them didn't quite come through, like the one that was in early March. We were looking for some signs. It wasn't there. So it went higher. So the next level was obviously after 135, it was 144. And that's where we came up with this, Gann's master square. And well, once it squared out, we were waiting for some sort of a pattern, changing the pattern, showing us the hand, that is about to unfold to the downside. And we got those. And we talked about all of these things each week. We talked about it for the last 4 or 5 weeks. And now, based on, just using the same square 144, coming down 36 degrees, 49.71 would be the support level on the cash. And that's exactly where we found the lows today.
Hmm.
Now, if we somehow get through this and get stuck under 49.70, 71, then we have a whole nother thing coming, right? Then we can certainly go 5/8 or the entire square back down to 72, which would be
Hmm.
actually half of the 144 square. You know what I mean? This is a 50%
Absolutely.
square, but if 50% is really the quarter of a square, the 144 is 50 of the 72.
Hmm.
So that's 36 degrees down. I mean, either way, it's half of this or a quarter of the other. Either
Hmm.
way, it's a key level to sort of notice. And this is what I would call a downside target. So this is where you want to lighten up on your positions or close out or whatever you like to do when we get to these
Hmm.
points, depending on what you're holding and how far these things are and if they're options or not. So either way, we reached it, and based on the same square that we used to call the high. So we don't have to change anything, and there it is. If you go back to the E-mini, same thing. I mean, we used the square of 90 because it was just easier to go with that, since that's the square we've been using mostly. And if you switch to 72, you can see, we also did more or less 144. 144 by 108. And then we pulled back right to the 50% line, which would be the same 36 degrees that we see in the cash. So that's kind of the story. So the story is, this brings it to a sort of final, not a final point, I should say an important point. The first critical important support, let's say the first major support on this square that we're using, and the one that called out the high. So it's something to notice and take note, like I said earlier. So that's where we are. What happened from here is, we'll follow the same methods that we use every week, which is, we want to watch that level here in the futures. It'll be 49.86 will be the level to watch if you use the cash. And we talked about that, 49, let's say 49.71 is the level.
Mm-hmm.
And the idea is we want to see the market above that. We want to see the market above the 50% level and then consolidate. If this is good support, right? It should consolidate and mount some kind of a counter trend rally, maybe an ABCD up, giving us a nice Gartley.
Oh, that would be sweet.
Yeah, we'll see how that second part works out. But normally we, trade and we talk about the markets in terms of each cycle or each leg. And, that's how we talked about it going up into this 144. And then from there, we were looking for the turn down to start, begin. And the key support levels on a square, obviously there are, 8 divisions and endless divisions really. But the ones we really focus on would be the 50% and the full squares. So taking that into account, well, we came to the first major support level, which would be the half of the square. And the next major level would be 4,700. And that's kind of a key level. I mean, really important level for a lot of reasons. Not to mention, if you look back, you can see all the highs.
Yep.
Right, sitting right there. So that's it. Anything above this 49.87 is generally, markets dailies, and it's okay ground. This is not in big trouble. Now, taking out the 72 would be in big trouble. Right?
Yeah.
And in this kind of a bullish market, coming down 50% of a square on the last leg is not a big deal in the big picture, as long as you're not, trying to buy it all the way down.
That's true.
Like that. If you're just playing the rounds, it's just fine. Well, that's kind of what I have to say. Do you have any?
Yeah, I mean, just that last night, based on the price action and where we came in and put the low, we were fairly confident that, okay, this first leg looks done. Now we have to figure out what comes next. What kind of counter trend we're going to get. Are we going to rally right back up and make new all-time highs, or is it going to struggle, consolidate, make a lower high, do a false break? I mean, all those are possible.
Yes, that's true. And speaking of what happens next, let's take a quick look at the weekly. I think that will help.
It helps a lot.
Yeah, it helps a lot. So let's zoom into the weekly. Weekly, you guys, by the way, what we had was, I mean, this is really classic. We didn't really spend enough time talking about it or being too casual about it. But we had a great Gartley finishing this up. You don't get to see these in major markets, especially on weekly basis like this. And we should probably spend a couple of minutes looking at that.
Yeah.
So let's do that. Give me 1 second.
And I know we're not at the end of the month yet, but it was another basically 7 days of monthly prints. But we're on the weekly, on the monthly, we're working on an outside reversal bar, which on a monthly basis is a big deal.
Yeah, monthly basis is a huge deal.
Yeah.
So here's the Gartley. Here's the X, A, B, C, and the D, and you can see the sweet spot for the targets. And we went right into the middle of that sweet spot. It's really between these 50, 52, 53, 53, 17, right in that box right there. And you can see how the trend line kept it until the last bar, right? And we broke out. We even went back to kiss it once. So that, I feel like that, that Gartley is okay. Gartley came in, everything came in. So this is sort of a completion. And geometrically, it was just beautiful. Everything worked out. And now it's calling these out is one thing. It's just handling the rest of it is a whole nother thing. So your work is never done.
Nope.
As far as that goes. So I'll go ahead and delete this. I don't want to crowd the chart too much, but I think it's an important sign when a almost textbook perfect Gartley puts in the high
On a weekly basis.
on a weekly basis. So
Yeah.
it's really, it's something to notice and account for. So what else can we say about that? That's really it. That said, the next part is really about trying to see what happens, how this is going to unfold, what we can expect. We're 3 weeks down, so it's time for a counter trend. See the 305. So I'm guessing if we're going to get a counter trend, next week would be the counter trend week, and then from there we can, try to see where we end up stalling out. There are levels, and we post them on the 30-minute chart on a daily basis, and we'll also talk about it on the daily chart that we work with here. But in the bigger picture, this, if you want to look at these squares, I'm just using the 72 here. If you want to look at these, and you can see these gray lines, these are the eights, right? Eights of a square, and coming down like 3/8 would be normal. Like this is almost 3/8, but 5/8 would be a normal correction for the S&P. Like this was a 5/8 of a square. So we could certainly have more to go. So that's what I'm saying.
Agreed.
And that would bring us down into this level, a little bit above 4,500, right into that zone, which would be right on top of the old highs. Makes sense. But in the meantime, let's see what we have to deal with next. Let me also, since we've been doing this for a while, take a look at can you see that okay, that chart?
Yeah, it looks fine.
Okay. Well, ever since the high came in, we've been talking about the counter trends and, watching out for where they could end up. And we've been getting pretty much all of them. We got 53.04, got that counter trend. 52.86 got the next counter trend. Then the 52.39 was the stall point. And we, stalled above it, then broke down. Counter trend couldn't get to that. And then 52.10 was right there, caught that one. And then the big one was when we sort of started consolidating below 51.20. And that was kind of a big deal. And we were talking about how 50.58 was support, but it's still weak below 51.20. So what do? Well, this is what happens when you get caught in these two strong points. You kind of get churned, and looked like we found support at 270 degrees down and messed around a little bit. But yesterday's close was very suspicious. We kind of broke below the 50.58, but we held above the 50.40. We kind of hung in there and then slowly start to slip through. Once we got through 50.40, it was like straight down into the 360, which, I made a post last night, and basically we held it there. 49.70 was that 360 down. From there, we got an entire, quarter of a square rally back up into the 50.58, test that area, and then we sold off again half. This is really, you talk about your ping pong charts. This is ping pong. Look at this. Bam,
Totally.
bam, bam, 50% full square, 50% full square.
It's a very good vibration on that one.
Yeah. And so now for today, we really want to see, can we get above 50, really kind of hold above 50.10? If we can't do that, market's still sort of in weak hands and weak position, weak legs. If we can hold above that, generally be above 50.10, 50.12. It's a little bit firm. Of course, it's Friday, so we'll have to wait till next week and see how it plays out. But I would say 50.10 is the key level to watch. And if we can somehow get above 50.40 and hold above, not like, here where we penetrate for a little bit and then sellers come in and we fail. If we can take 50.40 and then somehow grind through 50.58, then we might have some hope to get some kind of rally going in the other direction. And momentum's really not going to kick in until as of now, really, we need to get about 5,100 for, real momentum to kick in. Up until then, it's going to be sort of back and filling. So that's kind of how I see it. Can we go lower? Well, sure. If we can't get about 50.58 and we really can't even hold about 50.10, this is sort of a yellow flag. And if for some reason we can come down here and make a double bottom, still be fine, because that'll hold the general pattern together. But for some reason we get stuck below this 360 down, which would be 49.70. If we get stuck below that, then, we might have a lot more to go. if we do that
Yeah.
next up. I mean, it might be down in the 4,800s. We're not going to be slipping in 10s and 15s after that. So
Yeah. I mean, on my weekly full square, the next support for the weekly is 48.15
yeah, right, yeah, right in here.
down in there. Yeah. So if we slip below that, the lows we
Mhm.
made in Globex last night,
Yeah,
it's heading that direction.
yeah. So this 360 area, this 49.70 area is pretty good. If we get a big panic, we might sort of release some of that in this box between
Hmm.
59.70, I mean 49.70 and 49.25. Let's say this area here where I have a blue box. But long as we're above that, if we can really get above 50.10, is really the sign, the first sort of sign of strength, if you want to call it that.
Hmm.
But anyway, that's sort of how it looks to me. Anything you want to
No, I
add
think
to that?
that's good. That's good coverage. Just we're going to watch the monthly over the next 7 sessions and see if we do get that outside reversal, because that would be a big signal.
Yeah, and that's always a good signal.
Hmm.
So here we talked about it with the 72,
Yeah, the Dow.
talked about the cash. Yeah, we're good. Let's move on to other fun things.
Yep.
Let's
Go to
move on to
bonds.
bonds. Well, Ben, what happened was we got to that 114 level.
Yep. And that big ABCD completed.
Yep. Let me just move the square down a little bit.
Hmm.
So on the way down, all the way from back at 125, 126 levels, we talked about markets just bonds are basically going down. It's just the path that it chooses to take.
Hmm.
And once 119 got taken out, 119 and a half, we talked about further weakness, and the next step would be around 114. And lo and behold, here we go. We got down to 13 and a half. So bonds are definitely, well, we hit our target at 114 and then some. So I feel like it's not done. And we earlier we talked about, if we get to 114, we're certainly going to check these lows around 107.
Hmm.
I think it's still in the cards. Again, it depends the path that it takes. Are we going to get there quickly, or we're going to just sort of grind and dance around everything to get there, with maybe less drama.
Hmm.
So we're also looking at a 90 count, and that 90 count ends up being May 3rd, May
First week of
3rd.
May.
Yeah, May 3rd, 5th, 6th, 7th. It's right within that 90 from that high. Something to be, this is something to watch, see how we can complete this, because it could square, it doesn't have to square 90 by 90 necessarily. It could square in one of the divisions. So we'll watch to see how that turns out. Up until then, we're still bearish on the bonds. And so stay with the trend.
Hmm.
Right, Ben?
Absolutely.
Yep. Moving on to the weekly bonds. Well, there's our 114 that we've been talking about, and it comes from the high back in 2020. This is
Hmm.
a lot, it's a lot clearer, I guess, about how we get to that 114. And it is, it's a big support area. If you look back, that's clear enough for you guys.
Hmm.
We had all these old highs and consolidations right around in that area. So 114 looks like it should provide some sort of a buffer. So that's where the 114 gets in. And we're kind of squaring out here by between today and next few days, next week. We're 144 by 216.
Hmm.
And we'll see how that plays out. I feel like it's really not quite there because of this break. And if we take that out, um, well, we could go do the 180. Let's see how it plays out.
Yeah. The
Either
other
way,
thing,
watch it only because we got to 114, because this is a sort of a support level and it's easy to get a bounce off of it. So watch your positions there. In the bigger picture, we're still bearish, waiting to see what happens here.
and looking at the bearish side too, we completed that ABCD on a weekly basis. You can see it in there. at the low.
This one?
So if we take out those lows, it's going to have some juice.
Oh yeah, it's definitely gonna have some
If
juice.
we lose that ABCD, we'll have some juice
Yeah,
going
I see
down.
that. Yep,
Yep.
yep. So that's the Gartley on the flip side too.
Yep.
XABC, right?
Yep.
And we had a Gartley on the ES. And
Yes, we did.
Gartley's all around. Hey, it's Gartley season, right?
Yeah. So it's on support. It completed the ABCD. So watch those lows carefully. If they get taken out convincingly, it's going to run.
Yeah. And it's worth, when we have Gartleys, I think it's worth looking at. It's such a simple pattern and it just pays off so
It
much
works.
over
Yeah.
time, right? It's
Hmm.
really worth watching and something. It's one of the simplest things that with the highest rate of return,
Hmm.
you know, if you watch it. So if you do a Gartley, there's your Gartley. Let
Hmm.
me get my square out of there. So that looks good to me.
Hmm.
Not only does it look good to me, but that 114 that we talked about, 144 down from the highs in 2020, ending, and coming into some kind of a Gartley. Yeah, I wouldn't be surprised if we get a little bit of bounce off this, some kind of a reaction. Not only that, we're also 45 degrees down. So we got a couple of things going.
Yeah.
Right, Ben? So yeah,
Yep.
I think
It's worth
I
paying
wouldn't be
attention.
surprised. Yeah, I wouldn't be surprised if we get some kind of um, a bounce. And if we do break, looks like this 110 area is the next support. We have these equilibrium lines right in there. So 109.5 or so looks like the next stop.
Hmm.
We'll keep that in mind. And I'll delete that. So bonds, it's not that complicated. We could get it all complicated, but it looks very clean so far. And I think we continue to trade it like that.
Agreed.
All right. Next, we have crude. And well, we got up into the 50% of the square and we talked about, if we can hold above 83, it's really on a trigger and we could, hit 91 or more on short notice. So that's still in play. And right now we're just in that buffer zone, right below 83. So it's okay. It's still I wouldn't say this is negative necessarily because we do have a lot of
Good
support right through
structure.
there.
Yep.
Yeah, a lot of structure, good structure right around this 80, 81 area. So we're above that. Above 83 is sort of ideal. That's like sort of the sweet spot. From there, it's easy to sort of get pulled up. At the same time, we are, up 45 degrees. So it's okay to have a breather. I think we've had a
Hmm.
and long run, and this looks like a fairly normal counter trend. So we'll stay with that. I don't think we have to change anything. It's just moving, and here's the trend line below that. So we're well above that, and well, stay the course and look for the buy signals.
That's right.
Let's take a look at the weekly. Again, weekly, we had what's like almost 7 weeks up. So now we're having one counter trend. We had an inside bar. We talk about when the low of the inside bar gets taken out, and here we have a good example of that. And we came down into support. On the weekly, this box that we drew up, I mean, that's the lower part of his support, which is 79.90. Let's say 80. We have 80, then we have 81 on the daily. So that's really the support area. We'll see, and let the market breathe a little bit. It's been under a lot of pressure last few months, so
Hmm.
let's see how that pans out. For now, let it finish up the pullback.
Agreed.
Yep. Talk about a market under pressure. Well, there's gold, not willing to go down.
It's struggling to go down.
Right?
Hmm.
It's great. The great thing is, we had this, this square on the 135 come in like pretty grand in a grand way.
Hmm.
And but this is great. This is how it should happen. We come in with the high, we go down for one day, then we're kind of coming back for a lower high. So I would say, yeah, sure, it looks positive, but it's a little bit more risky at this point. But as long as, we'll have to give it some time to see how this consolidates. As long as we're above 2365, 2366, gold's in a very strong position, no question about that. I just don't know how much time this 135 by 135 would take, or how that square actually came in. I mean, there is a 144 sitting on right on top of it, right? So we shouldn't forget that. Let me put that on. We can take a look at it. So there's a 144 that we talked about a couple of weeks ago. And if that's a square, that's going to turn it down, and that would be next week. So it's not a whole lot of time. And this is kind of what happened to the S&P. Do you remember we had that 135 come in and it said, hey, this is important. It could turn here. But then the market kept pressing to the
It kept grinding,
144,
yeah.
right? And then we turned at that cycle.
Mm-hmm.
So it's possible gold might do the same, but up until then, at least it's above the 144 as of right now, which is at 2404. So, well, I mean, we're bullish. Potential square came in, and potentially another square, a bigger square could be coming in next week. So that's why I say it's a little bit risky here. So manage it knowing that. Anything you want to add, Ben?
No, I think that's a good call, is that it's had a hell of a run. It's not bearish, but it's banging into resistance.
Yeah, yeah. And this is where you can kind of expect some kind of a pullback and let it work itself out.
Our full squares on the weekly are close. Mine was at 2450, so it caught the high right there.
Yeah, here, I mean,
Yeah,
we had 90
yeah,
degree move straight
yeah.
up.
Yep.
And before that, we've been doing these half squares, which have been working just fine.
Mm-hmm.
And third here. So the vibration's okay, the movement's okay. It's just that we hit one of these key points, and we haven't hit one since 2022 was last time. So do 90 degrees from there to there.
Mm-hmm.
So it's a time, not a bad time to take a pause and see what's going on instead of trying to fight it out at the line, which is not worth it.
No, it can be detrimental to your financial health to do that.
Yeah. Yep. All right. So we move on to copper. Doing pretty good. I switched this to a square 72, and it looks good.
Yeah, it does.
So the key level is 425, which is where the 72 is, and that's where we had these other highs back in January of last year. So everything looks good. I mean, when the lows came in here, we called it out 354. A lot of meandering going on, a lot of base building, and then we had the false break that we called out. Got through that one.
Yep.
And it really didn't quite look back after that. It held the trend line. Everything looks good. We got above the square, which opens up a whole nother square. So for now, even with copper, 482 is not out of reach. I think it's reasonable since we were there just 2 years ago.
Mm-hmm.
So it's possible that we get up there, but it's definitely bullish. This is not bearish.
No, definitely not bearish.
So that's the main point, right?
Mm-hmm.
And it looks like the reason it's not bearish is it looks like we're getting pulled right into this ABCD.
Yeah.
So I'll just leave it there. It looks like that's what it's doing, and that would get us 180 degrees up and 90 from the lows. So everything looks okay.
Interesting.
Looks bullish. We're up 1, 2, 3 weeks. Yeah, we could get an inside bar or some kind of a correction. But generally, silver, gold, copper, it's all on the upswing.
On the weekly, we almost did 90 by 90 from the July 22 low.
July 22 low?
Yeah, from right there.
Let me take a look at that.
Take a look. It's just off by a little bit, but close.
Yeah, right there.
Yeah.
Looks very good.
Yeah.
Let's see how that works out. We have that, and then we have this little
the ABCD.
ABCD.
Mm-hmm.
It could end up anywhere in here. This looks very good.
Yeah.
And sometimes to a 90 square, we go hard into that. So that it could be this that's going up hard into that.
Sure.
So we'll watch that.
We'll watch and see.
Next, we have the dollar.
Oh, it's so close to that ABCD.
Yeah, it's so close. I'm almost tempted to say, we hit it.
We hit it, right?
Be done with it.
Mm-hmm.
Yeah, it's close. 107.25 is right there. And, this little pullback this week, consolidation, really didn't get deep. It's very shallow, very tight. So it looks bullish. And I would say, unless otherwise, it's we take out these lows, 105.75 or so. We still have upside, at least if we go and hit the target.
Looking at this chart, Barry, I have to say you had that ABCD on there for a long time and said it's being pulled up in. If
Mm.
somebody wants to see, go back a month, go back, 3 weeks, 4 weeks, 6 weeks, and see the progress of how this thing just gets pulled up into it. It's almost like a magnet.
Yeah, yeah. This and all the other ABCDs
Yeah,
we've had on
yeah.
here.
It shows you the power of that structure in the markets. It really
Hmm.
and it gives you a decent target and a decent, idea of okay, what's likely to happen. It's not a guarantee, but it's once you see those on the chart and you put them on early enough, it can be a guidepost that can help you manage your risk and manage, your positions as you watch it unfold.
Right, right. Very good. So if the dollar looks good, we'll just watch it just that way.
Mm-hmm.
Let's take a look at the weekly dollar. Weekly dollar is, well, I see is that the same ABC? Well, there's another ABCD in here, and that one looks a little bit tighter than,
The
well,
big one.
it's another Gartley's what it is. So,
Yeah.
right? So
Yeah.
that one's exactly at 106.75, which is amazing because that, if you guys know that's
That's been
been
our
there
number. Yeah.
that's been there for months, years
Mm-hmm.
actually.
Mm-hmm.
So, well, before this ABCD looks like this is let me delete this one for now. That looks like it's within reach. So XABCD, there's another Gartley working here.
Mm-hmm.
And in these types of patterns, you want to watch these Gartleys finishing up. So let's see what happens. There could be some kind of a shakeup in the dollar coming up. But,
Mm-hmm.
not quite there yet. We're almost there.
I'm telling you, man, that first week of May is starting to look really important
Yeah, I
based
think so.
on the way all these charts are,
Yeah,
developing.
yeah, yeah. And April's more of a shake and bake month, and then we
Right,
you know
right.
we get to see what happens in May, right?
Yeah.
And yeah, it's
The euro.
so here's the euro. Basically 108 is what we were keying off of for months and months, and we're under that. And the next target was really the 50% of the square
Which
or
we
the
got to.
ABCD target
Yeah.
down. So we're
Hmm.
still, and it's funny how it consolidates right about the 50% of the square, like everybody can see it.
Hmm.
Isn't that cute?
Hmm.
Right in that 1/8 range.
Yeah.
And so either way, that level is 106, let's say is the 50% of the square. And the ABCD is 105.5. So, that it's sort of support because you can see all that built up base from before. So that's putting in the floor here. Of course, if that gets taken out and we get stuck under that level, the 106, it's well, euro's pretty much done for a while. Then we're probably going to go much lower. But now it might be a place where they're going to try to maintain it within this tight band here. Let's see what happens. We've had a couple of nice ABCD down. There's an ABCD here. So when it stalls out, especially for 5 days, at a key level of the square, like the 50%, and we have an ABCD kind of
Hmm.
ending there. Give it a breather. You don't have to push it too much. Let it sort of solve itself here, and we'll see which way it's going to break. If we're getting another counter trend towards 108 and fail, or we're going to sort of grind through this. So that's my take on the euro. Anything you
Hmm.
want to add to that?
No, looks good.
Yeah. And the weekly, pretty much the same story. I mean, we're below 108. It's in a weak territory. The support base of the weekly is around 104. Ideally, we can get there. 105 would be fine. It's a little bit above that square, but that looks like the pattern. And you can see the tight range we've been in, and we haven't done too bad calling the corners in this tight range. We're not even trending like we did back in the early 20s, right?
That's
21,
right.
22.
Yeah.
So that's it. It's weak below 108. So keep that in mind. And what else? I think that's all I got. Let's I'll put it back to you. We'll go through the commodities and talk about anything else we have. So Ben, is this gonna stop at the 50% or are we talking another half square down?
Well, that's the question right now, and we've got what about an hour to the close.
Mm-hmm.
And we know how they love to close right on these squares. They leave us guessing all weekend.
Yep, yep.
anyway, just to review, we passed, we tracked this sort of into the high, which we got the high on this half square. And the
Right.
interesting thing, the NAS has been a lot weaker than the ES coming down. And it led on the way up, so it's kind of interesting. It's leading on the way down too. The reason why this area probably will hold, if you look left, it's also structural support. We have those December 23 highs right here.
Yeah.
And so we're testing it from above, and we've got the half square in there. So, we'll see. It's not a guarantee, but you do have both of those things going. We had yesterday, we had the Rebel Yell cycle hit. So, the big question for me now is I'm not as concerned about whether this holds or not. It's, what are we going to get on this first counter trend, and when are we going to get it?
Mm-hmm.
The interesting thing, we you can see we paused here at the full square for 3 days. We fought and then gave it up. We came down to the harmonic balance point, 2 days there, gave it up. So this money is definitely coming out of the NQs right now, and I think
Mm-hmm.
we're in a position where if we can catch a counter trend that gets stuck under this full square, that's going to be the fat pitch, that we're all looking for.
Mm-hmm.
All right, let's take a look at the weekly. Weekly shows basically a week-long battle at this full square, right? 7 to 10 days we fought and then gave it up during this, or 7 to 10 weeks, I'm sorry. And now we're this week we give it all up and take out all this price action. Not exactly bullish when that happens. But again, it's coming into support. Here we can say there's a good chance we're going to go down and test this half square.
Mm-hmm.
And that's around 16,250. There's a good chance that since we battled up here for weeks and weeks and weeks and are really giving it up, that we're going to
Mm-hmm.
come down and test that along with that trend line. Let's look at so the full square at 18,161 is key on any pullbacks or any counter trends. That's the 90 up from the 2020 lows, the COVID lows.
Mm-hmm.
If we get stuck under that, that's bad news. That means we're gonna, potentially catch that fast move lower. So we want to watch the characteristics of the counter trends and see how they play out. And we want to see if we do catch support on this daily at this half square and this structural support.
Mm-hmm.
Anything else to add here on the NQs?
We don't hold that 50%. It just looks like we have a lot more to go.
Very slippery.
Looks very slippery. Yep.
Mm-hmm.
And a counter trend looks like, we have very clear places where it should stall out also.
Yeah, from the weekly and the daily, we'll be watching, because this is what you look for, right? If we have a clear move down, if we pull back into this full square and fail and roll over, that is the pitch we want to hit. We want to be swinging.
Yep.
All right, let's jump over to Bitcoin. And look what Bitcoin did. Remember how we were talking about these Gartleys and ABCs everywhere? Here's a perfect Gartley. One,
Yeah.
two. There's your Gartley.
Mm-hmm.
I mean, look at the reaction we got off that completed ABCD too.
Yeah, huge. Yep.
Goes for half square right to the full square. I left this Gann fan on because we were talking about the one by one, and now you can see we were sitting on top of the one by one. We got under it, and now we're sort of back testing it along with the full square.
Mm-hmm.
So this thing really, to me, it really needs to get above this full square. And the full square here is around 64,800. If we don't get above and settle on top of that, we're in a really weak position, because we could come back down and hit this one by two. We could come back down again and test this half square. And if we lose, we've seen in other markets what happens when we lose a completed ABCD. It has some energy to it.
Yeah. Yeah.
So we got to get Bitcoin above this full square to have a more bullish shot here.
Mm-hmm.
For now, let the battle play out here and see what happens. Anything to add?
No, we're good. We covered it well.
Okay. On the commodity side, the grains actually kicked up today. Nothing set up yet, but because they've just been stuck sideways, but they did kick up, saw some demand come in. So we're going to be watching those over the next few weeks for opportunities,
Hmm.
good signs that we've got a bottom and a setup to trade the long side. It kind of fits with the way the commodities work, right? They go up in a short period of time, then they come down and correct, and it takes them a long time. And you want to start focusing when you see them stop going down and start going sideways, and then that energy comes into them and that
Hmm.
demand comes into them. And that's the sort of thing we're seeing in the grains right now. They've been going down for a couple of years now, 18 months to 2 years. They've stopped going down. They're just not going up yet. So we're gonna see the grains over the next few weeks. I'm pretty sure on the show. On the soft side, the ones we want to talk about, let's get to it. The star of the show for the last few weeks has been coffee. And look how this thing has just traded so nicely, right? Once we got the key is once we got the breakout and then the retest of the triangle, look at that move.
Smooth.
Yep. And we were on it right here.
Hmm.
Right here, we told everybody about it. Said, look, we clear this full square, this thing's going to go, and there's the move. So we went for a full square, square to square, a nice 45-degree move, completed an
Hmm.
ABCD from the false break low
Hmm.
that we had, and now we're seeing what comes next, right? We're looking what's going to happen at this full square. We've been crisscrossing it for 3 days now, so we got to watch and see how's this going to resolve. Are we going to pull back? If we do, we can correct to the half square and be bullish. We could even correct down here like 5/8 and still be bullish
Right.
because that would just sit on top of this and on top of this high here and
Hmm.
have all this price action below us to support it. So it is getting a pause here reasonable to expect? Yeah.
Yeah.
And based on the sort of 3 days crisscrossing this full square, it's probably gonna take a little break. But
Hmm.
let's jump up to the other time frames because it shows you the severity of the move we've seen and the what's potential here. So we came up, we made a high just below the full square, which normal, right? That
Yep.
would be once we break out of this half square, which we did, should make it to the full square. And now we're running into the resistance that you can see was over here on the left. Doing a correction or a pullback or a consolidation that holds within this half square would be super bullish. Say 220, pull back and
Hmm.
stay above 220, we would be very, very bullish and sort of build a base for the next move higher.
Hmm.
It could even pull back all the way to here, like 205, the breakout
Yeah.
of that whole structure and be bullish. So let's see how it plays out. Stalling here until we get above that full square, you can expect some sort of consolidation or chopping around in this area on a weekly basis. Let's take a look at the monthly.
Oh
Here's your
boy.
monthly.
Hmm.
Those triangles are powerful in these commodities. So we
Yep.
got a big monthly up bar. Now we're working on this resistance over here and this full square resistance up there. It's about
Hmm.
252. So that's the next area we should tag on a monthly basis,
Yeah.
considering we broke out, on this of this half square on the breakout move.
Hmm.
Anything to add here on coffee? You want to look at the daily, weekly, monthly?
We're looking good. I think it's got started. It broke out. It's moving, and I think it's now doing exactly what we're doing. You want to watch the counter trends and see how you can add positions.
Absolutely.
It's really that.
All right, let's go to believe it or not, the last commodity we have to look at. I mean, Barry
Mhm.
covered gold and he covered copper, and I don't have anything dramatic to add to those other than what we discussed in
Mhm.
addition to crude. Let's look at silver. Look familiar?
Yep.
It kind of looks like the coffee chart, doesn't it?
Yeah. Yeah. Exactly.
So we were in this triangle. And this one we've talked about on the show a lot of times. It was stuck in a half square for a year and a half.
Mm-hmm.
We broke out. This is the key, right? We always talk about sitting on top, right? Get above, stay above, and then you test that. There's your test. And
Yeah.
look what happens. Once you get that successful test, boom.
Boom. Yeah. No looking back.
And then look here, right? Broke above the full square, came back and tested it.
Mm-hmm.
Test this high, test that high.
And left.
Does a good job on the test, boom, passes the test. Now, the thing about this, and I was talking with Barry about it, I'll show you on the weekly. There is some squares coming in here, and there is some we completed an ABCD, and you could look. This is a week 10-day battle, right? Around this where we've crisscrossed this half square. So there's sellers and buyers that are sort of at a stalemate here. So it's not moving like it was moving here, meaning, okay, something ended up here, and now we're sort of deciding what's the next phase going to be like. Is it going to be a choppy consolidation? Is it going to be a pullback? A pullback to the full square that holds, super bullish. And that's around
Mm-hmm.
2647. That would be the most bullish scenario. Staying above that half square would mean, it's not even a correction. It's just, sort of burning off time. So we watch and we'll see how the daily plays out. Just this sort of price action and the move we had, completing the ABCD, and now the pullback says, okay, maybe something ended there, and we're trying to
Mm-hmm.
figure out what's coming next. Let's look at the weekly. And look at that, right? Nice ABCD into a half square, completes. And this is roughly as we were talking about in the copper from the July 22 low, which is
Mm-hmm.
here. I'm sorry, July 22 low would be, yeah, right in here.
Mm-hmm.
This would be 90 by 90.
It's definitely high potential for some kind of a pause.
Yeah. So a pause again would not be bearish.
Mm-hmm.
It's expected. We had a nice run, but we want to see what does that pause look like? Is it a sideways consolidation? Like if we
Mm-hmm.
consolidate above this 2746, super bullish. It'll be just like the gold chart. Remember when we were doing that triangle that was above the highs from like 17, 18, 20, 2020?
Mm-hmm.
If we go sideways in here, at these previous highs, really bullish. We could have a deeper correction, right? It could pull back and sit on top of these highs. It could pull back as far as this half square. That would still be bullish, but it would be a lot less bullish than if we just stay up in here. So we're going to watch and try and see what's coming next. What's the odds favor is going to be the type or structure that we get in this consolidation slash
Mm-hmm.
correction. Right now we got an inside bar. If we do a bunch of inside bars, weekly inside bars, and then go again, that would be
Yeah.
that would be fantastic.
Yeah. Yeah.
Let's look at the monthly. Why is the monthly significant? This move above this full square is big. Because if you look on this chart going back to the late 90s, there's only three times we've been above, one being now, then in 2021, and then back in 2010, 11, 12. Oh, the
Yeah.
rest
Yeah.
of that time, we've been below this 45, this full square 45.
Mm-hmm.
So getting above that, and more importantly now, let's say we consolidate, stay above. We do a triangle here, super bullish.
Mm-hmm.
So
And
we'll
we have that
watch
huge base now. So
huge base, 4-year, 4-year, 5-year base right here. If we stay above that and consolidate a little bit, no problem. Some people might say, "Oh, silver's done, get out, short it." I would say no. Just let it build momentum for the next move, build up energy. Anything to add to the silver analysis here?
well, also silver doesn't usually end in a whimper, so I don't think it's done. You know what I mean?
Yeah,
It's certainly got more to go. We just have
yeah,
to wait for the consolidations and counter trends to be done.
yeah. And I
Yeah.
think it's wise and it's smart because that's what the odds favor now based on the price action, to expect that we're going to get some sort of consolidation and look for some sort of correction. just based on the geometry, the cycles, and the things that have hit and come into play, these ABCDs, I think it's smart to say, okay, let's step back and see what comes next.
Mhm.
And that brings me to our ending topic for today, Barry. In your chart review, as well as mine, saw a lot of Gartleys, a lot of ABCDs, a lot of things that patterns which have completed. What does that tell you about the market, or what should you, when that happens, when you see this, different sectors, different stocks, different indices, different commodities? What does that tell you when you're seeing a repeating pattern start occurring in those different markets, especially one like a Gartley?
Overall, you want to see the context. You want to see where the Gartley is happening. Is it in the midway? Is it at a high, low? But in our case, in what we reviewed today, I feel like it's time for a bigger pause. Like we finished a big movement, like the S&P, the weekly Gartley that came in.
Mhm.
So, the resolution of that takes weeks also, right? Weeks and weeks. So it could be months to really see a bigger unfolding. It might take till somewhere in 2025, 2026.
Mm-hmm.
So it
Mm-hmm.
really depends. But overall, it normally calls for some kind of a change in trend or a change in character. I think that's the first thing. Here, it looks like we have, a number of markets showed up with Gartley's, and
You want to grab the screen and show something?
I could. Hold on. Can you see that?
There it is. Yeah.
Yeah. So we have a Gartley here on the weekly S&P. We already talked about that. And so what does it mean here? It means clearly we ended this leg. And is it a long-term one? Could it be a couple of years, or a year to the downside? It certainly could be. Okay. Because that's how they show up. Now, how do we know when it's not? Well, we know when it's not, when the high gets taken out.
Mm-hmm.
I just wanted to say, with Gartley's, one of the things you want to keep in mind is once the Gartley target is met, there's no guarantee that everything changes and we forever go in the other direction.
Right.
Right. But what it does mean is there's definitely a change in character and the quality of the market. And that's what we want to watch for. And if that aligns with other things, like in this case, we had a square.
A square.
Exactly. So if it aligns with,
Cycles. Yeah.
then you have a higher probability of a sort of a different market character show up. Like in this case, we get sudden weakness all of a sudden.
Mm-hmm.
So now we've been weak for 3 weeks. So that's if it shows up in that way. So here we have an X, A, B, C, D. So that could definitely signal. Remember, it wasn't the high, right? It was here.
Mm-hmm.
So that could definitely signal some kind of a pause here. We have a higher low. Sure, the bonds have been getting, racked for, 4 years, and yeah.
Right.
Right. So could it have a little bit of a counter trend like we've had all through the years?
Absolutely.
Sure. I think we could have an ABC to the upside. That's surely without any problem. So, but what is that? Well, what that means is the difference in the character, so you want to
Mm-hmm.
notice that if the market turns around, let's say we have a reversal on the weekly and we start to move higher, well, we want to keep that in mind. That has to be in your file cabinet. You got to file that and say, hey, the character could have changed. Now we could be doing some kind of a, if this is the downtrend, we could be doing some kind of a counter trend to the upside. So I think it's more in the bigger picture, it's more of a sort of a sign of changing character. That's really all it is. And if you have other things showing up in between, then I think you can roll it up into a trading situation. Like here's another one. We have X, A, B, C, and the D is where it's going. So when this hits here, now this looks like it could be ending. This is the high, lower high, and
Mm-hmm.
then we want to look at the character of what follows that. Is it going to be a big heavy bear market, or is it going to be some kind of a tight consolidation and we go on back up? Now, earlier I said there's one thing you really want to notice about Gartley's. Well, here's another one, right? X, A,
Mm-hmm.
B, C, and we're right up at D. I mean, as far as
Mm-hmm.
Gartley goes, this is completed, right? The only
Yeah,
way,
sure.
what you want to wait now is to see if there's some kind of a reversal on the high bar. But what I wanted to say was, so Gartley completing is one thing. Now, if the Gartley comes in and we have, let's say, 1 or 2 day pullback, we run right back up and take out the highs, then, then we have a whole nother leg left in there. So I think you have to be careful when the Gartley is blown out. You
Yep.
really want to get out of the way and not keep selling into it, thinking, oh, there's another ratio and another ratio. You know what I mean? I mean, there are
Yeah.
lots of ratios all the way up, up into infinity practically. So you want to be very careful in continuing to sell that when the correct Gartley, let's just say ABCD is a good way, that way you're very tight in your definition. Comes in, you really don't want that high to get taken out unless there's a rare, false break that comes out of it. But here, I mean, here's another, see how this is different from all the other ones. So we have a high came in back in 22. Sure. Then we sold off, corrected. Now this is supposedly after we corrected. This is the move back up. We have a higher low. And within that frame, we have a Gartley happening. So is this really, really strong? And does that mean the end of the whole thing? I don't think so, because the way it's happened, this is probably more of a corrective one. We might correct down into 105, this
Right.
area, maybe hold above the B point right there.
So the Gartley here has a very different meaning than the Gartley in, say, the ES, where it's ending on a high.
Exactly. That's what I meant. So you really want to frame it looking at the environment, looking at what else is around. I mean, here, like most Gartleys, if we can hold above, any counter trend holds above the level B here, it's in good shape. It could easily take off and finish up.
Sure.
So that's kind of what you want to look at. I mean, we've had all kinds of Gartleys here. Here's one X, A, B, C, D to the downside. Again, now, that all being said, when you have Gartleys in a congested sort of area, you want to be a little bit extra alert, not to get faked out by them.
A little bit cautious there.
Absolutely. Versus when they're super clean, like here, there's no, unclear, muddy water here. Clearly a high, sold off, A, B, C, and a D, very clean. So these are way more powerful than, let's say, finding one in a bunch of chop or tight consolidation, right?
Sure.
So I would say that those are some of the things. And overall, seeing a lot of them, I think it means there's definitely a change of character coming up.
I was going to say change is coming is the message, you know?
Yep.
And as traders, we just need to be aware of that, because that's how we benefit. We benefit by change, but we have to recognize it. And the reason I want you to talk about it and wanted you to talk about it is and when you see them in multiple markets, unrelated markets, you got to say, okay, there's a change happening. How it affects each market, as you said, it's different in the dollar versus the ES in terms of the significance of the pattern, but the patterns are pervasive. So you got to pay attention.
Absolutely. And yeah, so the main thing is a pattern and the position, right? We want to see the position. How does it come in? Does it come in like this? Does it come in like that? And that position tells you everything else that you need to know. So that's kind of it. I'm just here looking to see if we have anything
on the
anything good in Hang Seng. And you can see here, we did a XABCD. D came in right into the target area, sweet box, which is right, sweet spot is right in there. And we're consolidating. You see, we didn't sell off in a hard way.
Right.
And earlier when I was talking about Hang Seng last couple of weeks, when I say, hey, long as we're above this level is great, I'm really looking at the pivot here, like if you look at that 16,403, XAB, XABCD, right? So I'm looking at the B. So you can look at the B level to kind of judge the quality of what happens afterwards. So if you draw a line across that, you can see majority of that was holding above. And now we just broke under it, which is no bueno. So
no, that's not good.
Right. That means there's a much longer correction potentially coming in. But yeah, I think that's a good play on. I mean, there's all kinds of ways we can talk about Gartley's for probably 2 hours,
Right.
It's a nice tool. It's very reliable. It's consistent. It shows up often, and the odds are very high in your favor when they show up. So I think it should definitely be part of your toolbox.
And the key thing we always try to do is you take note of these things, right? We don't reach a conclusion, but we
Mhm.
take note of it, knowing that we need to keep this in mind because uh, it's a possibility, right? When the
Mhm.
pattern comes in, it creates possibilities, it creates probabilities that we have to know, right? It doesn't,
Exactly.
as you were saying, it doesn't mean it's going to crash down once the pattern completes, but you got to recognize that the pattern is there.
Ex-
Therefore, what's likely to happen?
Exactly.
So,
Exactly. And there are people like, Larry Pasapanta who just trades the Gartley, it works for him.
yeah,
And he's written a lot of books. So if you guys want some info, look up Larry's books. And there's also the original Gartley book out there somewhere. But the main thing there is really the ABCD and looking at how it shows up. And if the entire Gartley pattern is in, I mean, here's another one. You can, technically we're definitely, this is why we're cautious now. Why? We're really close to the ABCD,
right.
and it could have terminated. Now, if we get to 107, that would be a hard press going in, and that would really give us that extra push that we always look for, for markets to do, finishing up a leg. But otherwise, anywhere in here, it's good. And going back to, here's another little, tricks and tips. So long as after that happens, as long as we're above B, so here is 105, it's still very bullish. Yeah, sure, the Gartley came in, but as long as we're above B, it could just consolidate and go, which means that was just sort of a placeholder for time.
Yeah,
you know
exactly.
and
Just
then we can
burning
move
off
on.
time.
Yeah, yeah.
Well,
So
great show,
does that
Barry.
help?
Really, really appreciate all the information you're providing and the analysis. And if you all appreciate what we're doing, please like the videos, share them, subscribe to the channel. We're trying to grow the channel this year, so we
Mhm.
appreciate all your support that way. And we'll
And
talk with you next week.
I was going to say, and buy our t-shirts, which we don't have.
Yeah,
A
we're
lot of podcasts have t-shirts and all kinds of merch, right?
oh, not us. No, we
Oh,
don't
no,
we don't sell anything.
yeah, we don't have to sell anything. We just sell the market. We just sell
That's
short.
right. When it makes sense, we sell the
Yeah.
market.
All right. Good
Great.
show, Ben. Thanks.
Thanks,
Uh-huh.
Barry. Take
All right.
care, everybody.
Talk to you later. Bye-bye.
Bye.